Hi, I'm Peter Rose, founder of Longwood Currency Trading. What a retail Forex trader does not need to know. That's the topic of this video, and it's an important one too, because knowing too much gets in our way. We have so much information that it's very difficult to pull out the information that's critical, that's key, what I call key information. So there's the tendency for all of us to want to know as much as we can. And to a certain degree, that's fine as long as you are experienced enough to understand how to trade. To understand how to trade is number one. And then you look at the currency market itself and you say, what's the problem I'm trying to solve within the currency market? And then you write your rules according to however you view that market situation and how you want to construct those rules. Once you've done that and you're somewhat consistent with your entries anyway, you may still get screwed up in position management, but that's okay. Then you can start your further education beyond that. But to get to the point where you're consistently working away at a good entry position, you've got that resolved, you understand that, you're confident, then you can start peeling the onion back on the information morass and start learning a little bit more. Well, gee, maybe I better not trade when there's an NFP economic news report coming out, or I better not trade if I'm emotionally distraught or I've got a cold or something. So that's the time when you start to add on to your information. So information is probably well, that's everything. Too much is not good in the beginning. And even at the intermediate level, I mean, what do you need to know about NFP other than as an intermediate or advanced trader? Oh, I have an NFP result coming out tomorrow at 10 a.m. U.S. time. And so I'm going to be aware of that. I may set up some hypothetical trades that I might take depending on what the economic numbers come out as, so that the pricing reflects that. If I've got these wild price swings, I may not want to get in there. Sure, I could get in there, bump it right away, and it'll go 20 pips in my favor, and turn around and go 40 against me. So you have to know about volatility and your ability to deal with that and all that sort of stuff in order for you to say, oh, there's an NFP here, and I may want to consider that in my trading. Whereas if you're not quite ready to start learning stuff like that, you just say there's an NFP coming out and my risk of ruin is very high, so I'm not going to trade. That doesn't mean that you're not working. You need to get in there and watch price action so that you're comfortable with what you see in the different scenarios. I've seen NFPs go out on a 5-minute chart where price will move 20 or 30 pips and no pin bars. And I've seen other days where a price will go on a 5-minute 160 pips. I've seen 1-minute candles at 60 pips on an NFP. So, until you've seen all this stuff, how are you going to cast some behavioral rules for yourself in order to be safe and not have the risk of ruin? But specifically, as a retail trader, what do we generically not need to know? Well, first of all, I was talking about economic indicator releases. Those are not news releases, they are data releases. And that's different than a news release. A news release is, the control of the currency of a country indicates that the gross domestic product of the country is going to be XYZ. That huge economic and political unrest in a particular country is causing changes to the stock markets, and which are having a negative reflect on the currency market. It's Christmas. Whatever the news is, That's not something that you want to look at ever, because we're retail traders. You're not going to outdo, outthink, outlearn, outknow, out-accumulate information than a room full of PhDs in economics and business management and all that other sort of stuff that these large institutional trading houses have in-house to go through all that stuff. The Federal Reserve of the United States is made up of, I think it's 12 separate banks that have federal chairmen involved in. They're the largest banks in the country. And those guys get together when they're going to be changing interest rate policy, for example. And they all have similar, but many times conflicting opinions. And that they need to bring all that together so that everybody's in agreement that on average, we think X, Y, Z is going to happen. And so therefore we feel we need to implement this kind of economic activity against the interest rate policy. How do you compete with that? That's a dramatic example of it. But how do you compete with that? By reading all the news and looking at the Wall Street Journal and all that stuff? You can't. So don't try. My problem is I have an interest in that stuff. I love it. And so I bring this stuff up and I go, oh, wow. And I get influenced. And so if I've got a big day of trading ahead, I try not to even look at the news forecast at all. Nobody should care what your Uncle Billy has to say or think. If he's not actively trading in the currency markets themselves, he could be a stock trader for 30 years. He doesn't understand the currency market. Just because he was successful in real estate doesn't necessarily mean he's got any clue as to what the economic factors are that work in the currency market. I did 40 years of real estate investment and retired a millionaire doing that, so I'm pretty good at that. Judging it and all that stuff. But none of that has anything to do with currency trading. In fact, it has hurt my currency trading. Certain risk management factors that are prevalent in real estate, mandatory, absolutely positively have the opposite effect in trying to implement them in the currency market. And I'm constantly getting snipped by that kind of crap because it's just not, doesn't care. So my opinion of what somebody would say to me that's a real estate investor as to what's going on in the economy and in general how that is going to have any effect on the currency market is minimal. And most of the time, Uncle Billy's going to say that the currency market's a scam and he doesn't understand, all that kind of stuff that you're hearing. Nobody cares what Uncle Billy thinks. Pass him away. There are 400, 500 trading-related terms that are out there that you don't need to know. But every book on trading has those terms, the stocks, commodities, whatever. There's a glossary in the back, 5, 6, 8 pages of terms. You don't need to know any of those. When I work with somebody that is relatively new and stumbling around and having troubles, I don't necessarily have to do it for somebody who's an experienced trader. But for those that are 6 months or a year involved in that and they're mashing around in all these terms and stuff, it's distracting. And so what I do is I have 5 or 6 major key terms, and each one of those major terms has maybe 3 to 5 subterms on it. And it's easy to remember the subterms because they're related to the major key term. So you know 6 things and you know a total of around 30 terms. That's what it is. But 24 of them are basically related to the major ones. And so if I understand the major term, then the subterm, it's not like you need anything to learn. It's just part of the, when you're looking at a car, you don't need to know anything more than where the steering wheel is, right? You don't need to know all about the cam adjustments and whether it's a belt or You don't need to know any of that. It's a steering wheel. You turn it and it turns the car. That's all you need to know. God. So don't get involved in that. The next thing that you don't need to know anything about is technical analysis, because number one, technical analysis, the way that it's presented, doesn't work in the currency market. The prime example that I always pick on is Fibonacci's. Fibonacci used as a predictor or a confluence indicator of anything is useless. There's absolutely no correlation between a Fibonacci number and a currency pricing level. The fact that somebody can use them successfully as confluence doesn't necessarily mean that you could. Somebody with 10 years of experience or 5 years of experience that uses stuff every day is not using it to predict anything. Fibs don't predict anything. They confirm what's already happened, which may be nothing more than what a moving average line would do. You know, if you understand moving average lines, you've got all the indicator quote stuff that you need to know. So technical analysis, don't worry about it. Fundamental analysis, don't worry about it. That all has to do with the news and how you apply that news into your trading using different strategies. You shouldn't have different strategies. You should have one set of rules that covers trading. God, the more stuff that you add on your plate to know, the more complex your solution matrix for a problem becomes. If you have two, let's say, let's talk about indicators, you know, like an RSI and a Bollinger Band, for lack of anything better. If you have those two indicators, you can put them into 4 different permutations. You can have, let's call one A and the other indicator B, so I don't have to say RSI and whatever. So I have indicator A, which maybe is RSI, and I have indicator B, which is the Bollinger Band. So I can have 4 different permutations of those 2 indicators. I can have just A, I can have just B, I can have A and B, or I can have B and A. Four things to think about as to ordering the importance of those 2 indicators. If I have 5 indicators, there's 325 different permutations to that. Now, can you imagine the cluster of shit that goes on with that? Even 3 indicators is, I think, 19 different permutations. I mean, how many permutations can you stand? So be very, very careful of the number of things that you feel that you need to know in order to successfully trade currencies. Trading currencies is pretty simple. And the reason that it's simple is because it's so massive that you can do predictive analysis against it, probabilistic analysis against it. And I talk a little bit about that with folks that are communicating with me, but I don't go into a whole lot of detail with it because it is a detailed topic and it's more oriented toward a course, and it's not even relevant to understanding in order simply to say to the person, you're safer trading currencies than you are in trading, you know, Bob's nickel and dime store stock on the penny market. Because you have to know all about Bob's store. And if you're going to trade Walmart, you're going to have to know a whole different set of characteristics and accounting principles and all the rest of the stuff that go with that to judge the validity of the business. At currencies, you don't have to do any of that because it's so massive. So the less you need to know, because it's so massive, means that you don't know stuff. You understand probabilistic analysis. And that's the key. And in fact, when I teach currency trading, we look at the entry analysis of the life cycle of a currency position first. The life cycle currency position is something I came up with as a rip against my 33-year career in the software engineering market, where we used what's called the software development life cycle, the SDLC. It's a methodology for dealing with the solution of very complex things, and it itself is fairly complex. The life cycle of a currency position is simple because the market that we're looking at is inordinately complex, which means that it's easily simplified. And so I have 3 phases to the life cycle of a currency: position, entry analysis, position management, and entry methodology. Well, Peter, if you've got 3 phases, that means you've got 19 different permutations you could put them in. Wrong, because entry analysis has to come before position management, because if you don't have an entry, you don't have a position to manage. And if you don't have a position to manage, you're not going to need to exit anything. So when you're looking at the numbers of things that you're considering in trading, if they're in sequential order, that makes it simple. Even though you might be dealing with a lot of information, as long as that information is in sequential order, it's simple. And so the life cycle of a currency position is simple because the 3 phases of it are sequential in nature. Each phase only has one rule. Each rule, therefore, is sequential to the following rule. Each rule itself is determined by satisfying conditions, 3 to 4 conditions in the rule. The entry analysis rule, for example, has 4 conditions. I have 4 conditions. You might have 3, you might have 23. That's up to you. But I just have 4. And they're sequential in nature. If the first condition fails, I'm out, I'm done. If the first one is okay, I move to look at the second condition. If that's not okay, I'm out. If it is okay, I move to the third condition, and I move all the way down until I get to the last condition, and that's true. I execute the rule. So the conditions of the rule are sequential. So you could have 100 conditions. As long as they're sequential, you're okay. That's the simplicity that you can bring to the currency market if you know how to do that. If you don't, then you need a mentor or somebody to show you. I've been a software engineer for 33 years. So this stuff, I did this stuff for 33 years. I know how this problem solution, I know how to put this stuff together. So you need to find somebody that you can trust that has the ability not only to use that information, to do it, but also to teach you. I mean, I taught people how to do computer programming. I had a little business on the side where I would teach basic computer programming, so that somebody could get going on that. But I know a lot of programmers who couldn't teach anything. They're really good programmers, better programmers than me, but they couldn't teach how to do what they knew how to do. So that's what a retail Forex trader does not need to know. That simplifies everything. If you just did that, I think you'd see an improvement in the results of your trading. Don't look at news forecasts. Don't consider what Uncle Billy thinks. Forget about all the related terms 400 terms that you have in currency trading. Just what are the key things that you need to know in order to hit bid ask? That's all you need to know. And don't be messing with technical analysis or fundamental analysis. If you take all that stuff off your plate, I think there'll be some things about trading that become clear to you, and that'll help you. You might want to send me an email and ask a question or something. I might be able to help you, just point you in the right direction. I'm happy to do that. But please, just accept the fact there's a lot of stuff that's out there that people are telling you that you need to know that you really don't need to know. And in fact, if you go and study it, all it's going to do is be distracting for you. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.